Well, good morning, everyone. Thank you for joining us today for our weekly trade and tariff briefing. My name is Matt Wonderly. I'm the Director of Investments here at World Trade Center, Utah, and I have the pleasure and the honor of facilitating today's conversation. If you are here for the first time, this weekly webinar series is intended to provide you with the latest information about trade and tariffs. You can view previous webinars on our YouTube channel and find updates to our tariff dashboard on our website, which will a link in the chat for you shortly. Today, we're excited to hear from first Ben Kolendar, our Chief of Staff at World Trade Center Utah, about updates to the World Trade Center Utah tariff dashboard. And after Ben, we'll then welcome Natalie Gochnour, the Associate Dean in the David Eccles School of Business and Director of the Kem C. Gardner Policy Institute at the University of Utah, and who also happens to co-chair our board of directors. So we're really excited to hear from Natalie. But Ben, let's start with you and we'll kick off some of these updates.
Thanks, Matt. I'm going to share my screen like always. All right. So for those of you who may be joining us for the first time, this is our tariff dashboard. You can always access it. It's in the link, or we put a link in the chat as well, wtcutah.com/tariff. So if you want to follow along with us, you feel free to do so. It also has a link for our for these webinars if you want to share them with other folks who may benefit from it at the top of the page. So today we're just going to jump straight into updates. There were a couple of actions just to update on. The first is the 301s that we've talked about in previous webinars. There were two significant ones that closed this week. One was on countries with structural excess capacity, and this is a 301 tariff. Those comments closed on April 15th, as did the comments on um, countries who have standards that need to, from the administration's viewpoint, be improved regarding forced labor. So those were about 60 countries. This is going to be a broad tariff. And as we get these comments that come up, it's just important to think about your industry and think about providing comment as these roll out because it does give some legal recourse down the road to provide comment on the Federal Register. So those have both closed. We're going to move on to what a big topic is going to be next week. We're going to hear a lot about the refund process that's going to go into effect. So, as many of us will remember, these tariffs the IEEPA tariffs have been deemed illegal by the Supreme Court, and Customs and the Court of International Trade have been talking about what the refund process will look like. It's been announced we've been tracking for some time, April 20th for the date, and that is when phase one of this refund process will come into play. So this is where our dashboard becomes really useful for many folks. We get a lot of questions about, what can we expect on the refund process? What will that look like? And we use our links right here to put the primary resource documents with all the technical language you'll need to reference. So the refund introduction is a good place to start. And it just basically breaks down, here's what you need to do. You need to sign up for this. Obviously, you're going to be in the ACE portal, but you need to prepare your CAPE declarations, which is a tab in ACE to get these refunds. So you'll want to start with filing these declarations, and there's like a big section here we won't take too much time with, but we may go through in a future webinar with detailed instructions on the CAPE tab that you're going to want to use, and then the instructions behind, if you get certain errors, what do they mean? Mass processing and timelines. So if you're thinking of applying, if you've already applied, for example, this says you may want to pull that back and use the case system rather than the protest system to receive your refunds, and that you can expect 45 days from the date of acceptance by customs. So in total, you're probably looking at a 60 to 90-day process. After it's accepted by customs, you're probably looking at a 45-day timeline. So just something a lot of folks want to know. how long will this take? What do I do? What do I need to do to prepare? And it's all in these customs documents that are linked on our page right here for this item that we're tracking. So just to make it easy for our community. Um, Another update we're going to have today is regarding the 122 tariffs. So, as many people remember, these are the tariffs that went into effect after IEEPA were deemed legal. They're temporary, they're 150 days. We're tracking that these will last until about July 24th. They're currently at 10%, though some comments have been made that these may go up to 15%, but currently we've seen no formal documentation around that, just some rhetoric that that may be likely. The big update this week is that there was a court case last Friday while we were doing the webinar where there were oral arguments in the Court of International Trade about what will happen with these tariffs and will these tariffs be deemed legal or illegal. And just some key takeaways. A lot of the oral arguments centered around the balance of payments and what that term means. The Department of Justice wants to make an argument that the balance of payments is a very current account driven, short term focused thing. Whereas the counter argument is that the balance of payments is just a very broad over time piece. And that argument's important because the current accounts may be running deficits or low, but overall, the United States has 252 billion in official reserve assets as of April 3rd, and that is the highest on record. So, depending on which term the court will ultimately side with on what balance of payments refers to, that will likely lead to what the decision is in the court case. So that was a lot of the discussion. We don't really have any timelines right now, but it's at least the oral arguments are in place, and we'll continue to monitor the 122 tariff. The last item I'm going to just touch on because it transitions into what we're going to hear from Natalie in terms of the situation with Iran and what we're looking at with our economics on that front is the threat on the 50% tariffs on Iran. So the administration announced this almost similar to an IEEPA tariff that was, until the Supreme Court made it illegal. This is primarily what this webinar was focused on is here's a set of 5 IEEPA tariffs that were announced this week. You need to be aware and be paying attention from where you're sourcing from. They were overnight, they were quick. But this one is still unclear. So this was announced on April 8th, and we'll continue to monitor how this will be put into effect. But essentially, this tariff is meant to go on countries who are supporting Iran, whether it's military weapons or other means of helping their economy. So this tariff ranges in some of the information that's out there between 20 and 50%, with most of the arms being supplied to Iran being in that 50% range. We haven't heard any countries specifically identified or any tariff mechanism announced yet. So this is one that we're going to continue to monitor as we go about this. There's a threat out there on this tariff. We're tracking it, but as of yet, we haven't seen any um, formal documentation or tariff actions by the White House. So with that, that was a lot of updates for this week. I'm going to pause and stop sharing my screen, and we always invite questions along the way as well, whether it's on the tariffs that I just presented or anything Natalie's about to share with us as well. So, Natalie, it's off to you.
Okay, thanks, guys. Actually, I'm going to do that differently there. Good morning, everyone. Thanks so much, Ben. Thanks, Matt. Happy to join everybody. I want to start with a few caveats, right? I'm going to share with you some insights about what's going on in the economy vis-a-vis the Iran war. But Ben and Matt and I were chatting. I mean, 10 minutes ago, 15 minutes ago, New York Times reporting that Iran is saying the strait's open to all commercial traffic. They're happy about the Lebanon truce. The U.S. is saying the blockade continues. There's just no certainty in any of this. And that's part of the problem for sure. But what I want to do is just walk you through the things that I'm following, things that I'm watching. I'm going to chat about the economic outlook with a heavy emphasis on the Iran war. And the way I kind of think about this is an economic shock. Here's a quote from Moody's Analytics. They did a nice piece on the oil shock, and they're calling it the largest disruption to global oil supplies in history. And then they have that chilling statement about that the recession risks are uncomfortably high and rising. Now, why are they doing that? I mean, they're saying that because you've got tariffs, you've got inflation, you've got oil price shocks, you have rising debt, certainly a lot of uncertainty. And that's problematic for even the most resilient of economies. When Moody's says that, they're looking at something like this. This is millions of barrels per day in oil production. You can kind of see the history. But you can look at the really steep fall at the end there with this current oil shock. Now, with this morning's news, oil prices dropped so far 11%, if I had that right before we got on. So this is very much in play. This number is now wrong, but this is the Brent crude oil price that's published by the Energy Information Administration. And you can just see that stable, $60, slightly change oil prices leading up to this, and then essentially doubling. And when you break it down, this is what economists would say. I want to focus on the right-hand side. Every $40 increase in oil prices, if it's sustained for a year, it bumps up gas prices by $1. It takes $120 billion of extra consumer spending. So you can think of that as taking $120 billion away from other consumer spending. It's a hit to households. It reduces GDP. And it boosts inflation by 60 basis points. So it's not helpful. And but we do have a lot of caveats both in the US and in Utah because we are energy producers. And that's a gift in a crisis like this. It doesn't make it perfect, but it is a gift. So this is US history of net imports of crude petroleum products. You can see that we were an energy importer, and since roughly the late 2019, we've been a net energy exporter. And you see that note I put there. That means that rising oil prices are in part redistributive to the U.S. and Utah economies because we're also a net exporter in Utah. What do I mean by redistributed? I mean that consumers pay more, producers get more. And in a lot of states, a lot of countries, it's just you pay more. But when you're a net exporter, you pay more on the consumer side, you get more on the producer side. So that softens things a bit for us, but it doesn't resolve things. Okay, so this is probably the most provocative slide I'm going to show. I apologize if it sets any alarm bells off in anyone, because I'm just trying to give structure to what we're thinking about. But so I've got all this uncertainty. What are the potential outcomes? And the reason it's a little bit provocative is, who knows? How do you say this stuff? But I think we're kind of at that top one right now, a mutual stand down where, U.S. and Israel have sort of paused. And that's good in the sense that it's bad in the sense that you go back to where you were right before the crisis. That's what status quo ante means. And so if the U.S. doesn't finish the job and eventually and blinks and walks away, and we go back to where we were, that's a truce on Iran's terms. We're moving rapidly towards the middle one, a negotiated settlement. This is the diplomacy talks, and as long as the diplomacy talks aren't what I'll call performative, as long as they're real. And right now it's hard to know, right? Because both sides put out things that serve their negotiated interests. The president's been putting out on his social platform a lot of positive news right now. And if it's true, then we're on the path of a truce on U.S. terms. Let's hope that happens. And then on the bottom, I just put this Iran regime failure, which can be, the first two boxes there. If they move towards a moderate authoritarian, that can be okay for the U.S. If they take a democratic turn, that would be amazing. But there's two other things where you'd have a hardline takeover or just absolute anarchy, and that would result in longer term kind of conflicts. So let's, ask me questions on this, but this is kind of the way that I'm kind of thinking about it. Another way I'm thinking about it is what's the likely duration of the conflict? Because that has huge economic implications. It's in Iran's interest to make this last as long as they can. And then how much economic destructiveness is there because of, blockades and problems with oil pricing and whatnot. So, we're in a short duration right now, and we're moving. It's getting longer every day, so we're moving longer. And if we go the scorched earth path, meaning bomb, 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 that's quite destructive, but it's short. But if you move over into this upper right quadrant, then you get into real problems. And so all of this posturing is along the lines of trying to manage the economics and keep it short. As you know, Iran's fighting an economic war, and the US is fighting a military war, an air-driven military war. So it's a very unusual set of circumstances that way. All right, I'm going to go to a little bit bigger picture. One of the things that I think we should all be thinking about is, the Economist magazine's opined about this, like the world has changed, and it's been changing. It's been pivoting here for a few years, but we've been on this peace dividend, world military spending as a percent of GDP dropping. And this is really good for the economy because you put more money into productive assets. To the extent that you spend money on military assets that aren't used, they're just dead weight losses in the economy. But and so I'm expecting this curve. It's already tipped up, and I'm expecting it to curve up a lot more. So I follow the work of Alpine Macro. They say the world is moving from an era of disarmament and globalization toward one of fragmentation, rearmament, and strategic rivalry. There will be more deadweight losses around the world. So I know that's not great news to an international trade crowd, but you live this and know it better than I do. But I just have not, rearmament is not a word that was in my vocabulary until a few weeks ago. And I think that's where we're at. So my kind of summary is something like this. We're moving from this era of disarmament to rearmament. The peace dividend is gone and done. Expect more instability and uncertainty, and that will have economic ramifications on so many things. There's so many what I'll call flashpoints that are out there. There's accumulation effects. How do they roll up? There's multiplayer dynamics. It's not just us. It's Israel with us. It's not just Iran. It's the other Middle East countries. I think the biggest risk to me is if this escalates and Saudi Arabia jumps in a big way, right? If they are so put off by what Iran is doing to their economy, you get what's called an escalation trap. They call it survival-driven maximalism coming from Iran, and every choice, de-escalation becomes a higher price than escalation, at least in the minds of what you're seeing. And so I just think there's a lot of these flashpoints. And so what's my rule of thumb? Buckle up. We could have a growth slowdown, or we could have a recession. They're both still in play. Don't know. And see, I got a few more graphics here. Let me just quickly go through these. Since Liberation Day, Ben, I was thinking I'm not following effective tariff rates really anymore. I don't, in some ways, I'm following this. I'm looking like, what are the effects of it? This is a 6-month moving average because job growth goes like this, but there's just no question that the labor market's deteriorated since Liberation Day. This is US data. Here's what it looks like in Utah. I wanted to show you the last 3 recessions. dot-com relatively minor, right? It didn't drop too much. Great Recession was both long and deep, and then COVID recession very deep but short. You can see where we are here, but I would just remind you, we're growing right now 0.6% in Utah. The Utah job growth, most recent, 0.6%. Our historical average is orders of magnitude higher. I'm going to say about 2.2, probably have it down here in my notes, what our historic is. Here's another, oh, there it is, 2.1. Here's another way to look at it. Post-pandemics, and I'm just picking 2023 as maybe the pandemics, all the stimulus money's kind of been working its way out. But look at this, right? We're normally at the yellow line. Look at where we are. Here's what it is by industry. We have seven, one, two, three, four, five, six, seven. Yeah, we have seven major industries in contraction. That's very unusual for Utah. Even the mining industry. Now, keep in mind, this is delayed data. This just came out last week, but delayed because of government shutdowns. But in this period, energy development was actually declining. Now, I expect that to change, with this war, but this is the tech sector information there contracting. Tourism is the leisure and hospitality, a bad ski season. And then you have this. This is El Irion, the famous economist from PIMCO that I guess is now with the Lions. He's also warning us about how this particular slowdown is rewarding capital, not labor, and so creating a K-shaped economy. And so he's basically saying, "Come on, U.S., don't have hubris. Don't say you're this resilient economy that can get through anything. Be humble and start acting because there's people in need in this economy." And then just lastly, so here's what inflation looks like. This is core PCE inflation. So this is what the Fed tracks. Core meaning energy's pulled out and food. This is pre-war. You can see 3 bad months of recession or of inflation data. Normally in a forecast, it follows maybe more of a normal curve where if you took 100 economists, where would they be? And this was the probability of a recession before the start of a war. This is just hypothetical, by the way. I'm just giving you an example, but it's looking more like this. The tail got fatter on the recession side. The probability of a recession has risen. And so you get something like this. This is showing you every recession since 1960. That's kind of the white area. It's showing you what the recession model coming out of Moody's looks like. It's been accurate every time. When it gets above 50, the yellow line, a recession happens, and you can see, look at this. It's been very uncertain, right? Lots of volatility, but it stands in February at 48.6. And so that's a tricky thing. Okay, Ben, that's what I essentially prepared for the group. Happy to answer some questions. I guess I'll just say that sounds kind of gloom and doom. I'm not as gloom and doom as that presentation sounded, but I think those are the things that I'm following and watching. And yes, I have concern.
Well, Natalie, this is so great for so many reasons. A lot of our businesses are always grasping at straws saying, how do I think forward about what this is going to look like? How do I get the right context so that I can make business decisions? And so it's so great to have some of these insights framed the way you have. I almost, I'd like to maybe chime in with a question while I know others are thinking of questions as well. Um, you know, with the optimistic spin on in your not to put, a tough situation in a positive light or something, but as a business trying to think through, okay, now what do I do? I wonder
Mhm.
if you have any insights in particular about having thinking through empathetically with some of the businesses trying to navigate this, what some of your thoughts have been as you go through some of this data, or pieces of information that might be useful for some of the businesses to think through. Should I go to this market? Should I go to that market? Should I focus on this area of my business? Should I expand domestically? Should I open up a new facility somewhere else, right? Like that's a lot of what the folks we're working with are thinking about and trying to be on offense in a very tough situation. So I'm just wondering maybe some perspectives as we talk this through and with everything going on. What insights or thoughts might you have for some of those Utah companies?
Yeah, well, I mean, I think it's prudent right now to keep your powder dry. I think that there's every day changes afoot,
Hmm.
and at least in the near term, this is going to continue to be a very unpredictable situation. But I have some optimism. Like it seems like it was a lot worse a week ago, and it feels better now. Now this could change, right? But we need that straight open. And the news this morning is that it's open. The US to me appears ready for a deal.
Hmm.
Um, Even on the political side of things, it's not been great news.
Yeah,
Regardless of your political point of view, has not been helpful to the current administration from an economic perspective. Um, I think so. So if I'm a business leader, what I'm always looking for opportunity, but I have a heightened sense of care right now.
that's helpful.
Even if it's just for another 3 weeks, because again, I think that there's both sides need a deal here. And if you think about it, what's going to happen is I think they're going to agree to an eventual draw, a mutual stand down. Both sides are going to claim victory and kind of move from there. That would be great.
Yeah,
That would be great. I
yeah,
think the pressures are there for that. And the US can, know that we have, you know, significantly degraded their military abilities and held the nuclear threat at bay, and everyone goes home.
right, right.
Natalie, it comes to mind that a lot of industries will be reactive to what happens here and they'll start innovating. We saw that decades ago when Denmark moved into wind power and France into nuclear power over previous oil issues. So they're very reactive, but what can Utah businesses do now to become more resilient? And where should they be focused now to be proactively engaged in countering as much of this conflict as possible?
Yeah. Well, I mean, anything that you can do to take care of your supply chain risks. That's what all of us have been doing, for over a year or more. I mean, even since COVID. And so you're completely in a mode of managing risk and finding avenues of opportunity. Interestingly, and I know our attendees know this, but I can't think of a better state to be in. We do have that going for us. And some of you might say, come on, we're always talking about how good we are. I don't mean it like that. What I really mean is there's just some fundamentals here that are helpful. Our latest data shows we have the second most well-trained, well-educated workforce in the country. That's the percent of the adult population with a degree, certificate, high value certification. Our data shows that we have the most equal distribution of income of any state. There's a lot of social cohesion here, high levels of social capital. We're a very young state. Our youth makes us tech savvy, makes us affordable, makes us healthy. These are cushions, in times like this. And so I would encourage business leaders to see the good in the Utah way and what we do, but actively manage these risks.
Can you elaborate a little bit more before I know we're probably thinking of some questions here, but elaborate more on the K-shaped economy uh,
Sure.
that's happening right now and why that's most vulnerable for lower income households and how to again counter that as well and what to be prepared for going forward.
Right. It's been going on for quite a while. I'll be a little philosophical here. In about 1982, 83, Time Magazine declared the personal computer the person of the year. And and if you look at the economic data, since we've moved into the information age, there's been a bounty and spread. And those that are benefiting from the information age are getting more and more income and wealth, and those that the economy's not working for are being left behind. And they call that bounty and spread because some of us are getting a bounty and there's a spread occurring. And that's the same concept as a K-shaped economy. Stock market's just been incredibly, helpful to wealth creation for people who own capital. And right now in the job market, if you're graduating from a college or university in Utah and you don't have job growth at 0.6%, you're going to be staying with your parents longer than you thought. That's K-shaped, that's K-shaped economy. So it's rewarding capital and it's not rewarding labor. And over time, that creates social unrest. There's lost opportunity for people. And I think some of the biggest challenges is it starts to create public policies that try to be redistributive, which I think are really dangerous. I mean, everyone knows I'm a free market person. I can't imagine what the mayor of New York is doing right now about tax the rich. I think that's going to be very damaging. And so that's not what the K-shaped economy is about from a policy perspective is how do you give people who this economy is not working for the skills and the ability to thrive in this economy? How do we lift them?
Right.
And education, stands front and center. And I don't just mean formal education, but I just mean, areas of opportunity.
Ben, do you mind if we answer Eric Barnett's question here as a closing thought, or do we have
Sure.
time for one more?
Yeah. As a
I
closing thought, I think since we're a minute past already, but I think we could do that. And then
yeah, Eric,
if that's okay with you, Natalie.
yeah, of course. Thanks, Eric, for this question. Natalie, what is the typical rebound when the markets improve? Do we expect to see rebounds first in mining or other markets? From the improvement, typically, what is the impact to other industries when we see that improvement? And we can close on this as well.
Yeah, I mean, the way I think of that is I think of the industrial structure of the US economy, of the Utah economy. And yes, we're going to see energy in a high commodity price environment, expand. But we're also going to see, the health sector, I'll say business services, start to recoup some of the lost gains. And I really hope that people start to travel again, internationally, for example. The sector I continue to be a little bit worried about is the information sector, the tech sector. It's challenged at this point, and AI is good in the long run, but it's causing some disruptions in the short run. And let's see where it takes us.
Excellent. Well, Natalie, thank you. Ben, thank you, both of you, for taking the time to speak with us today. And thank you to everyone who tuned in this week. We really appreciate your time, and this is great information. If anyone has any questions, please email us. And feel free to visit our website to learn more about the upcoming events and look for this on YouTube soon. So look forward to seeing you next Friday. Thank you.
Thanks, everybody.
Thanks, everyone.